please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
The market is down about 24 odd points or so, 10,188. So which means, I mean, over the last 15 minutes or so, while we've been on that Binani story, we've actually recovered about 20 points. We're down about 40. And there is a little bit of pickup which is happening once again. Ashwani Gujral is with us. Ashwani, thanks very much. What would you make of things and what would you do?
See, basically we're in a weak uptrend. So what you are seeing right now is basically choppiness. So what you should look at is, yesterday's high needs to get crossed. If we need to make any headway. What's interesting today is that erstwhile stronger stocks like Britannia, Jubilant, Titan, these guys are coming off, and what's going up are significantly weaker stocks. So that doesn't often help the cause of a rally. So my sense is that for the next couple of hours, if you have to take a trade, you can possibly get short with a high of the day type of stop, and maybe if the market continues to remain in a ranging frame of mind, 10,200 we should assume has probably failed, and we look at lower levels about closer to 10,100, 120. Similarly on the bank nifty, we had a bit of short covering on ICICI etc., but that's kind of petering out. And today since morning, HDFC is coming under fairly heavy selling pressure. So there isn't enough for the market to move higher on. So that way, taking shorts right now wouldn't be such a bad trade. Risk reward is favorable. The stops are fairly close by. Having said that, there are stocks moving up and down. So Delta Corp is a buy with a stop of 252, target of 268. Balrampur Chini is a sell with a stop of 78, target of 70. And ICICI Pru is a buy with a stop of 388, target of 410.
Okay, well, there was some news coming in on Jubilant FoodWorks where the GST Anti-Profiteering Committee has issued a notice to Jubilant FoodWorks. So that stock was moving closer towards the low point of the day. It was down around 1.5%, now down around 1.7%. Overall, the stock is above 2,300 now. Ashwani, if you have to talk about a technical call on Jubilant FoodWorks, what would it be?
This GST etc. are minor issues. They'll probably be able to resolve. So overall, it's a strong stock trading almost at new highs. So any sort of correction that comes in because of this news etc. should be used to buy into Jubilant. What's also significant is today IT index is coming off substantially. Now it remains to be seen if if Nasdaq continues to fall and the FANG stocks get beaten up, how much do the Indian IT stocks get into trouble? Because if the part of the market that was doing well, that comes under threat, then the falls may become larger. So that needs to be figured out in the next couple of days.
Okay, well, a couple of Twitter queries for you now, Ashwani. First up is Vineet, wants to know if he can buy AB Capital at current levels for a period of 3 to 5 years.
AB Capital is not the best performing NBFC and not even the best performing financial. There are a lot of financials which are at almost new highs. Something like Kotak Mahindra Bank or IndusInd or even HDFC Bank. People who want to get into financials should get into those financials. Don't try to bottom fish in financials, because given the rate hikes both in US and maybe hawkish comments here, chances are financials will remain under pressure for the better part of this year.
Okay, the other one is Deeksha. She has 100 shares of PVR at 1280. Wants to know the view on the stock for a period of 2 years.
See, PVR had fairly sharp rallies, and post that it's moved sideways for a long time. I think the stock is consolidating, and if you can keep a 1150 type of stop, at some point when the next rally starts, you'll probably get 1600, 1650.
All right, Ashwani, thanks very much. Appreciate you coming in. We're down about 23 points right now. 10,188 is where we are trading at. We will come back and look at market fundamentals. Nischal Maheshwari of Edelweiss.
Well, for the markets, the mid-cap index is absolutely flat. We have the Bank Nifty, which is holding with a gain of around 0.2%, and the Nifty, which is down around 23 odd points. So overall, consolidation, you'd have to say, in a bit of a range-bound trade. We've given up gains from the day's high. Nischal Maheshwari, head of institutional equities and Edelweiss Securities, joins in to discuss the fundamentals of the market. Nischal, hi. Thanks very much for joining in. Well, a lot has gone down when it comes to, say, the financial space in the past couple of days. We all have been talking about what's happened with ICICI Bank and the news surrounding Axis as well. How are you approaching the private banking space, and has the sheen gone off a little?
So I think the private banking space is now, and historically has always been in two parts. One part which has been focused on to the retail asset side, and the other one which has been the corporate lending side. And we have seen that the difference or the space between the two has just become a bit more starker. So during this last 2 or 3 days, basically, which we've seen is you've seen Kotak, IndusInd, HDFC Bank actually all appreciating, whereas the corporate lenders all depreciating. And I think this is a bit of a temporary phase after this news has been out in the last 2 or 3 days. What I believe at these prices, I think all of them only become more attractive. The one thing which I would like to highlight is basically that the liability franchise of all these corporate lenders is equally strong as the retail asset banks also. So one shouldn't discount the liability franchise of these banks. All of them have a CASA of 40% plus. So I think that is where I believe after this turbulence, most of these stocks would settle down.
Nischal, is there any interest to, say, buy an ICICI Bank right now? If one can see through this period of turbulence and news flow and volatility, etc. Most agree, and even bankers, other bankers, maybe even rivals agree that last 2 or 3 years, ICICI Bank has really consolidated and consolidated well. I mean, you know, they've been saying no to deals, no to infrastructure financing, etc., real estate, all kinds of things. So they've kind of sort of gotten their act together. So we know the problems, but from a stock point of view, is there interest to buy?
No, definitely. We have a buy on the stock basically, and we continue to like it. Obviously, if you look at it in the last 1 year, three of their subsidiaries, rather 3 of the subsidiaries actually gone public, and they have created huge amount of wealth for the investors. So I think it's only a matter of time. Basically, this news passes, and it'll become. People come back to basically once again look at this stock. So I think it is a temporary turbulence basically, and this could be a good time to actually start accumulating this stock.
If you had to, give an assessment of what we can expect, say, from the PSU Bank numbers this quarter, especially when it comes to things such as asset quality, as well as, credit growth, what would you peg it as? Is it probably going to be worse than what we saw in the previous quarter? Where do things stand based on the developments we've seen?
So I think PSU banks this quarter is going to have a double whammy basically. One, it's going to be the asset side, and the second would be their bond portfolios. I think in both these sides basically they are going to be having a problem. So I see a worse quarter for PSU banks than the last one.
Okay, and what about the sectors that you're probably optimistic on when it comes to an earnings perspective?
So earnings-wise, we are positive on the private sector banks. I think they will continue to chug along around 20% kind of a growth. Then metals is the other space basically which we are positive about. These are the two spaces which we are looking positive about in this current quarter.
Okay. You know, Nishchal, Edelweiss as a house has been tracking what's happening in the hospital space quite keenly as well. What are your thoughts in terms of the entire deal that took place with Fortis and Manipal, and what kind of shareholder value it might create eventually?
So I think Fortis, the offer according to us is, I think the offer is a bit disappointing because to us I think a fair value would have been around 180 rupees. And the value of the hospital itself, basically, we would have pegged it around 125 to 135 rupees. And then you had the SRL part. So to us, the fair value is around 180 rupees. And we believe the deal should happen around closer to those prices. And I believe that's where this stocks looks interesting at these prices then.
Okay. Well, Nishchal, you know, the other thing which has really surprised the market positively is what's happened with the CV sales this time round for this month. If you have to choose one auto stock or CV maker at current levels, or, you know, if you have to give your perspective on what's happening in the space as well, which stocks would you probably recommend, and do you expect this kind of momentum to continue down the year as well?
So we have been one of the earlier guys basically to have a positive view on Ashok Leyland, and we continue to follow that. We have a buy on the stock from around 90 rupees and we continue to like that. I think the stock has outperformed clearly in this market. We expected these numbers to come back after the initial 1 or 2 months of disappointment in the current year, and I think the numbers have clearly shown up. But I think even Tata Motors is started looking interesting, given that the valuation and the stock is corrected so much. But we prefer Ashok Leyland over Tata Motors at the moment.
Okay. All right, Nishchal, we're going to leave it on that note. Thanks very much for joining in. Always a pleasure to hear your views. That is Nishchal Maheshwari of Edelweiss Securities talking about the fundamentals of the market and stocks that they like from the space as well. But we need to take a break now. More on the markets, more on specific stocks, and more on the Nifty, which is currently down around 18 points. Once we're back, stay tuned.
Okay, the market is coming back up. When we started at 11, which is almost about 60 minutes back, we got the Nifty, which was down almost 40 points. I mean, 35 to 40 odd points. We are now down just about 11 points. The high is still about, what, 30 points away. We got to about 10,229, which is the day's highest point. We are right about at about 10,100, 10,200 or so. So not quite at the high, but off the lows definitely. This is a CNBC TV18 exclusive. ICICI Bank's co-founder N.K. Vagul has defended Chanda Kochhar and the bank, as saying that the debt of 3,250 odd crore rupees is not a new loan to Videocon, but a consolidation of exposure over time. Listen in to excerpts of that big exclusive.
3,250 crores of rupees represents a new loan. I don't think it is correct. In 2012, what was given at 3,250 crores represents the actual exposure of ICICI at that particular point of time. Represents a series of loans given to Videocon and its subsidiaries over a period of time, over a period of last 4 or 5 years, prior 2008 to 2012. Okay. And in 3,250 crores of rupees does not represent any increase in exposure. Okay. In fact, when you take the total consolidation, I am told that there is a reduction in the share insofar as the consortium is concerned. So no new facilities were given. ICICI Bank itself is concerned, they have not done anything wrong. They have only consolidated an exposure, which was a performing loan for a period of 5 years, which has become non-performing and which will go into the insolvency. And from what Videocon's statement is concerned is that, well, it might be able to, bank would be making the provisions, and for the bank is fully protected. There has been no conflict of interest. Secondly, I think there has been no quid pro quo in respect of that. And third, I think all disclosures have been made, whatever is required to be made. These are the 3 things which are made. And as far as I know, Mr. Sharma, who was former vice chairman of the Hindustan Lever and a very respected person, whatever he does, he used to do it fairly thoroughly.
Okay, some important comments coming in there, but we need to wrap up the show. As we do that, let's give you some good news. Your wait is now over. The market leader in business news is now available at your fingertips. We have CNBC.com, which is going to be coming soon on your phones. Always stay connected with CNBC TV18. All you need to do is log on to CNBCTV18.com.
Stay up to date with the latest market and financial news with CNBCTV18.com, coming soon on your iOS and Android devices. All these important news, videos, data and analysis, all of it right there.